13F filing season is finally here. We already talked a little bit about David Tepper and his moves. That was in another video. We have also Ray Dalio's Bridgewater. Of course, it's not Ray Dalio anymore. It's Bridgewater. They opened their position in Tesla. I think more than doubled their position in PayPal. Yes, believe it or not. And so with the 13F, what it is basically this: a quarterly report that must be filed by all institutional investment managers with at least $100 million in asset under management. It's also for companies. So in this case, Nvidia. Remember last year, we talked about that as well. The 5 companies that they invested in: ARM, NNOX, SoundHound, Recursion, and Applied Digital. I think those were the couple of companies. Of course, in the meantime, they invested in a couple of others. So let's go over that. And remember, when these things go out and get released into the wild, the stock reacts accordingly. So if they opened a new position, a stock will probably explode. And when they close a position, a stock will basically crash. But as I've been saying for months and months now, just because Nvidia has a position in a certain company does not mean that this should be your whole thesis. And I've seen that sadly with a lot of people that have been buying SoundHound in more recent weeks and months after it has gone up already triple digits. Now, I talked about SoundHound a year ago, more than a year ago, when it was under $2, before it was known that Nvidia invested in the company. It made sense under $2. But then when it reached $10, of course it reached over $20, it didn't make sense anymore. And so we're going to talk about that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So 3 months ago, this was Nvidia's 13F form. So they've got Applied Digital Corp, ARM Holdings, NanoX, Recursion Pharmaceuticals, Serve Robotics, and SoundHound AI. 3 months later, well, there were some changes there. As you can see, no more NanoX, no more SoundHound AI, and no more Serve Robotics. What we do have, and this comes at no surprise, Nebius Group. We've talked about Nebius on this channel a month or so ago. The investment from Nvidia, so now it's officially there. It was already known. And also WeRide. WeRide is basically a robotaxi company from China. If you've been following my videos about Uber, you know that WeRide and Uber have a partnership. They've launched basically a robotaxi service on the Uber app in the UAE. So this is basically that. And they also reduced their stake in ARM Holdings. Now, what does that mean for a stock like SoundHound? Well, SoundHound year to date was already down 23%. And right now, pre-market, it's already down another 27%. Of course, if you zoom out, the stock is still up triple digits. And we don't even have to look at the year-over-year comparison. No, just in the last 6 months alone, this stock was up close to 200%. And at one point, even over 350%, basically based on hype, right? We've seen many of these smaller companies, AI companies, quantum computing companies, all went up triple digits, not based on results, not based on profitability or anything like that, based on hype. If you don't agree with me, then I'm sorry, but you're just living in some dreamland, because a company like SoundHound, which right now was already close to $6 billion in market cap, EV to sales the next 12 months, closer to 40 times. Yes, revenue is growing quickly, but remember, this is also including acquired revenue, right? From the acquisition. This is not organic revenue growth. Okay, revenue growth, still great. Let's put it that way. But this company is losing more money today than it did before, and it's still diluting shareholders quite a lot. Of course, if you bought a year ago and you sold the top, congratulations, you've beaten the market for the next decade plus, right? So that's great. But as an investment, I've seen some people talk about SoundHound at $20, and they were quite shy to say that, oh no, it doesn't make sense. No, it did not make any sense. Doesn't even make sense at $15 either, because to me personally, this does not have any moat. You cannot tell me that this is a company that has better engineers, better tech people, software stack than any of the big tech players or all of the new LLM providers out there. Sorry, but it just didn't make any sense. And this is basically it, right? Revenue growth, no question about that. Organic, inorganic revenue growth was there. But if you look at net losses just kept on increasing and increasing. Just didn't make much sense. For Nvidia, of course, their investment was a pretty lucrative one as well. And now, well, it's over. They rather invest it in something else. But I'll ask the same question again. Did you invest in SoundHound because of Nvidia? Or did you invest in SoundHound because you believe SoundHound can be a successful company? I guess we'll see where the conviction is. Moving on to Recursion Pharmaceuticals. Of course, I'm not going to talk about ARM because everybody knows what ARM is. But moving on to Recursion Pharmaceuticals, ticker symbol RXRX. Unlike SoundHound and the others, here we can see that year on year, the stock is still down. Okay, now the market is open, stock is up another 7-8% or so, but year on year, the stock is still down despite Nvidia being an investor here, or despite them having a stake in the company, which is quite strange. But then again, we know that pharmaceuticals, these types of companies, biotech companies have really struggled in the last year or so. It's not just them, same with AbCellera. It's similar, but not the same. AbCellera is more focused on antibodies discovery. Recursion is a bit more broader than that. But here as well, you have a company that is, well, growing revenue quite rapidly. Market cap, again, is quite high. EV to sales quite high as well. So yeah, it's expensive. It's expensive. Revenue growth is there, but profitability is still far away. This was their last earnings report. As you can see, no problem with the revenue growth, right? That's increasing quite nicely. Operating expenses is up as well. Net loss has increased a little bit. So yeah, it's these types of bets, Recursion or AbCellera, it's, yeah, you are willing to take a short-term hit. You also have to be willing to take the full hit, even if it goes to zero, if it doesn't work out. Just have to position it correctly. For me, AbCellera in the public portfolio, it's what, 1% of the portfolio. So if it goes to zero, I will barely even feel the hit. But if it works out, then yeah, the profits will be quite good. So this is Recursion. Still, Nvidia has a position in that. Then with regards to Nebius Group, of course, I will not explain the whole Nebius thing yet again. NeoCloud company with some other aspects as well, some other call options that you get when you buy Nebius stock. If you want to learn more about that company, I'll have the video in the top right corner. And here we can see with Nebius, I think the market just didn't really know much about the company, right? Because the stock is up another 4.8% today. Year to date, the stock is going to be up closer to 60%, market cap over $10 billion. So yeah, it's a very good company. This was a huge buying opportunity after the DeepSeek crash, right? It was down 37% or so. Fortunately, I did not buy that dip/crash. I just added to other positions. But yeah, for those that did, you're already up 60%, maybe a bit more since then. It's a great company. It's not the cheapest one out there, but this is definitely one that is growing super quick, and they have huge growth goals as well. Now, next week, their report will have an earnings call as well. We will finally get to know a little bit more about, well, the team, their projections, right? Because this is finally going to be an earnings report and a call that, well, the public can listen to, because remember, previously they were not listed. They got backlisted into the NASDAQ a couple of months ago at the end of 2024, the whole Yandex divestment from Russia. So that's going to be quite interesting. It's an excellent company, not the cheapest one out there, but if their growth goals do get achieved, I think this goes much higher than where it is today. And by the way, before we continue here with WeRide, which is up today 135%, so here you're definitely getting that Nvidia pump. With Nebius, of course, it makes sense that Nvidia is invested in that company because, well, that company relies on Nvidia GPUs quite a lot. So it's a win-win, and some will say that, yeah, this is just Nvidia's way of buying revenue, right? You invest in these companies, you give them money, and then these companies basically buy GPUs from Nvidia. Okay, I guess that's a cycle. So WeRide right now up 135%. I mean, yeah, this is purely based on the Nvidia pump, right? We've seen that with SoundHound, we've seen that with the other companies as well, not just from Nvidia, but from other companies that filed in 13F and then poof, a stock is up. I mean, here as well, EV to sales next 12 months, 117 times. This is a company that's expected to grow revenue quite rapidly, still unprofitable. I wouldn't want to chase these things, right? I wouldn't want to chase these things. It's interesting to see what investments are being made, but yeah, I'm not chasing this. This is just the market reacting. Oh, Nvidia invested. Okay, boom. Algorithms start buying that. Good for trading, I guess. Same with Tempus AI, with Nancy Pelosi taking a position in that with her call options. I mean, that thing also continued to go up and up and up. It's really up to you if you want to chase those things, trade those things. You can make a lot of money for sure. But for the long run, to me, I I just don't feel comfortable with these types of things, because eventually, if maybe 3 months, 6 months from now, they're not on the 13F anymore, you're probably going to see the stock crash. So like I said from the start, invest in the companies because you believe that the companies are going to be successful, not because Nvidia has a position in them. And by the way, with WeRide, specifically with their partnership with Uber, with the launch of robotaxis on Uber app in the UAE, again, reinforces my bullish thesis on Uber that they're not going to go away. Autonomy is just going to be another enabler for them, not their destruction. That's just my opinion. Of course, I know a lot of Tesla Uber bulls, funny enough, Uber bulls, they believe that Tesla will be successful and so Uber will be destroyed. To be honest, if your thesis is that for Tesla to be successful, Uber has to be destroyed, then I guess you're not convinced that Tesla is going to be successful, because I think Tesla can be successful and Uber can be successful as well. Same with Waymo and same with all the other players as well. The transportation industry is huge enough for a lot of players. So anyways, that's what happened with Nvidia. Of course, those are investments that have been made probably in the last 3 months. We'll see what happens in the next 3 months. So all in all, I know a lot of attention will just go to SoundHound because that has been the more popular name. The stock has done extremely well year on year. I know some people will think, oh, but you're just short. I don't short, okay? I don't short. The maximum that you'll get with a short is 100%. And with these meme stocks, hype stocks, usually you will get burned because higher can always go higher. Of course, now the momentum has been broken, but yeah, that's just it. You just have to be responsible, not be greedy, be fearful when others are greedy. That was the video title of my last SoundHound video, which was probably near the top. I almost forgot this one, last but not least, Serve Robotics. This is the smallest one here, a market cap of $572 million. As you can see right now, the market is open. This stock is down 42.2%. In the last 6 months, the stock is still up 24%. Of course, it was up way more than that before the market opens. In the last 3 months, the stock is still up 58%. This is, again, a could be great company in the future. Also, I think a company that has partnered up with Uber. We talked about that on the channel. It is just very, very expensive. Very, very expensive. Even if it continues to grow like this, you're buying years and years and years of future growth. And to be honest, I mean, since the election, a lot of these small and speculative names have gone up triple digits based on nothing more than meme profiles and hype. That's about it. I'm very glad that already right now in February, we are getting the much needed correction in these types of names. Hopefully, most of you have already exited, took the profits, ran away to the Bahamas, to the Maldives, whatever. But yeah, chasing these types of things, when usually when you see in just a matter of months a huge increase in most of these little names, usually time to wave the red flag. So yeah, if you're asking me why I didn't talk more about these small cap companies after I've been talking about them before the election, it's basically because, well, there was just too much hype around them, too much meme status, so it's better to just stay far away. So all in all, that's about it. If you enjoy this type of videos, well, like and subscribe. If not, then not. But I see you in the next one for sure. Bye-bye.